Hello and welcome everyone for another weekly market commentary from StashAway. With me again, our Chief Investment Officer, Freddy Lim. Fresh off the flight from KL from a seminar last night, right?
Yes, that's right, the deep dive.
Exactly. And with that being said, on the topic of events, we have a couple of them coming up actually next week. They're both on the 23rd of October, one in Malaysia and one in Singapore. In Singapore, we will be having a seminar on how to plan for your retirement, featuring SRS. It's called an Ask Me Anything, so you can ask us any questions that you have for retirement planning on SRS. Does it make sense for you to use it or not? So we'll be doing this on the 23rd at 7 p.m. You can sign up as always by going to our event page at stashaway.sg/academy or /events, both work. And then for our event in Malaysia, we will have personal finance basics, and that's also on the 23rd. And again, you can sign up on that for stashaway.my/event/academy. Both work here as well. With that being said, Freddy, lots of tumultuous things going on, right? Even since last week. I know we always say this, that new things happening, but they are, right? Especially when Trump is on a tweet storm. Mm-hmm. Let's start with actually the bigger thing that could potentially maybe impact the trade war, right? This bill that got passed by the House of Representatives already yesterday, I think, right?
Yes.
Can you maybe, I didn't even know much about it, maybe can you explain a little bit more?
As a background, Hong Kong is currently treated differently than China in terms of still viewed as an autonomous zone, right? One country, two systems in principle. Yeah. So it still has its own free trade deal and rights with people just like before 1997. However, what the House has just passed is more on that, if China is going to govern Hong Kong more and more, if there's more and more interference in Hong Kong, it's not really independent, isn't it? Yeah. Wouldn't Hong Kong then lose that trade rights as a free port? Because it's now more officially like a Chinese state. So this is a very sensitive topic, and the U.S. House has already passed a bill. They would revoke this status for Hong Kong if China continues to quash the Hong Kong protests, and so they're supporting the protests in a way. And that really angered China, because China has already threatened retaliations against that. Details are not there yet. It's just verbal. But let's not get excited for now, because this is just the House. It has to go to the Senate, where it's dominated by Republicans. If it's also passed at the Senate, then the Congress as a whole, the House and the Senate that forms the Congress as a whole, then would approve the bill. And then that would really raise some hair, and that would likely translate into a disruption to the US-China trade talks. Yeah. But then we are far away from that right now.
Yes, and I think they didn't even have a date set yet for the Senate to even vote on this, right? Yeah. So yeah, like I said, not getting overly excited about these news items, but good to cover, because this is something on the horizon that might happen, right? Staying on the US topic, with a couple of weeks ago or a week ago, they started pulling out of Syria, northern Syria, right, where they were supporting the Kurds. Yes, maybe you can give us a little insight there on...
Yeah, it's probably the biggest blunder in Trump's foreign policies, the trade war not counting aside. As you knew, the Turkish were at odds with the Kurds in that region, and the Kurdish army has traditionally been an ally to the U.S. I think in the last war of Afghanistan, the Kurdish were an ally to the U.S. And so what happened is you're now leaving your own ally on the cold by withdrawing your forces from Syria, and then hence giving Turkey an opportunity to invade and take over. And Turkey is also sort of, according to many channels in the US, sort of a terror sponsoring state, right? There's always this suspicion. So this raised a lot of eyebrow from both Democratic parties and also within the Republican parties itself.
This whole blunder, I think even the Republicans are very against what he did there, right?
And Trump has faced a lot of opposition from within his own party. and he's been flip-flopping his positions now. But the anger damage is done.
Yeah.
It's been a big issue in the US right now. It may, to an extent, if not well managed, affect his support within his own party into the 2020 general election.
Yeah.
So this is not a trivial matter.
Yeah, absolutely. No, you're right. And then let's shift the focus a little bit closer to home here for Singapore. Can you maybe give an update on, there's some news items about, Singapore economy, but then also maybe talk a little bit about the investment landscape currently?
Well, there's nothing new about the impending slowdown in the Singapore economy, and it hits semiconductors and electronics industry very hard. That's all priced into the market, and you realize that the market actually stopped reacting to this, but there's no catalyst for a rebound. But the bright spot among all this, the exception is actually in the real estate sector. We've seen a huge rebound in REITs, like Maple Tree Trust and the likes. They're really doing well. I guess it's in an environment where globally, led by the US now, rates are staying low and coming lower again. That sort of created a lot of demand and hunger for yield for investors in the region. And a lot of REITs are actually seeing lots of strong demand over the last quarter, Q3. Yeah. And in fact, if you look at the investment sales figure for a lot of these REITs and property companies, all these names, there's been a $16.4 billion Sing dollars of sales done in Q3. That's more than double what's happening in Q2.
Yeah.
So there's some fantastic sales figures.
Right?
Yeah. So that's a bright spot, and it's not all bad.
Not all bad, exactly. Yeah. No, we always talk about a lot of the news items which usually sell only bad news, right?
That's right.
So that's a bright spot there. Okay, and then one thing you get all the time as well, and I have gotten this in some of the seminars as well, or even before StashAway, is that everyone says, oh, passive investing or using ETFs myself is very, very easy, right? Anything you want to share with us, or is it really easy? It might be easy in a bull market, right? But what happens if it's not?
Well, the goal is not to be easy, but yeah, you may mistakenly believe that it's easy to just adopt a passive strategy. But people tend to ignore the big points about, first, you need to have an investment plan that looks at your monthly income and your spending and how much you can save. There's a lot of discipline around that. You need to set your goal, like, for example, why do you invest in the first place? Is it for a 30-year retirement goal, or is it for 10 years from now you want to send a child to university somewhere else? Or is it to put a down payment for a flat in 3 years' time? Or that requires a lot of planning in your lives, setting those goals, and then you have a portfolio that matches the horizon, right? The time horizon of your goals and your personal risk preference. So all these things are easy to say, they're not easy to do, because it requires a lot of planning, a lot of soul searching, right? And in particular on the risk setting bit, it also requires you to be true to yourselves and really, really think about, what risk level would it be such that you're unlikely to overreact to short-term drawdowns in the markets. So there's a lot of stuff that goes on in the planning bit that is critical for your long-term success for a passive portfolio. So ultimately, it's never going to be easy. Yeah. It's not easy in a different way, right? Yeah. Whereas active trader also have it difficult because they have it more difficult with the markets. They would have to get in and out, time the market well, or pay up for it. But the difficulties is a different nature, but it's never going to be easy when it comes to investing, passive or active.
Passive or active, exactly. Yeah, and you don't want to get whipsawed, right, in the markets. Yeah. That's what happens usually then, and then you get the bad returns, right?
That's right.
Anyways, thank you very, very much, Freddy, for that. I think that's going to be quite interesting for the listeners. Again, thank you all very much for listening today or over the next few days here. If you do have any questions, comments, concerns, please put them below the video in the comment section, and Freddy and myself will pick those up and get to them over the next few weeks. Again, thank you, and have a good day. Bye-bye.
Ciao.